box I see he's asking if it's going to be recorded. So yes, it is. As long as anybody ever registers for one of our webcasts, even if they can't attend, they'll be emailed a copy of the recording. Also, it'll be posted on our websites as well. We're going to try to do a few of these kind of updated OptionVue essentials, so to speak. We're going to keep them a little shorter. I'm going to try to keep this down to 30, 35 minutes here, and just kind of zero in on a couple of features at a time. That way, you're not going through an hour-long presentation, trying to cover a whole bunch of things really quickly. So today we're going to talk about some volatility features in OptionVue. I mean, that's one of the main reasons people get OptionVue, is to take a look at the modeling that's offered and a lot of the historical volatility information, and how you can make use of some of the scanning features in OptionVue to find candidates that display certain volatility characteristics. So without further ado, I'm going to go ahead and share my OptionVue. And here, coming up here in 1 second. And we're going to jump into the volatility charts. So basically, this is your quotes display, very customizable. What I'm going to do is let's take a look at an Amazon chart. Okay, so what you could do is you could go right into a volatility chart, and when you click on this, this is kind of what comes up here. Right now, this is actually what you'll see when you first click on a volatility chart. Okay, it's displayed in terms of weekly data when you first come in here. You can click on this D button here and it'll pull up a daily view of it. And down at the bottom here, it's going to tell you what you're looking at. Okay, you're looking at the red line, or brownish red line here, is statistical volatility. A lot of people know it as historical volatility, which is the volatility, the movement of the underlying. And then you're going to see the 30-day implied volatility, which is the volatility the options are displaying. Okay, you can see these various spikes here, and I'm sure you can imagine what most of these represent, and it's on a quarterly basis. These are earnings that's happening. You're always going to have a rise in volatility and a drop off right after the announcement. Okay, I'm going to go ahead and click on this button right here, which is actually the price chart information. Okay, when I do that, a bunch of other buttons become available up here, and this one shows earnings. Okay, and you can see these are showing the dates of when earnings announcements came out, and there's always a steep drop off right at those dates. Okay, I'm going to go ahead and take off the price chart for a second because I wanted to show you this feature down here. This button down here, this M button, will pull in a number of different lines here, and this is showing you the volatility on different time frames. So you have a 90-day implied volatility, 60, 30. Okay, and actually, if you click on one of these lines, you can see the volatility cone for that time frame. Okay. Okay. Let me get this out of the way there so you guys don't have to see that. So again, that's that M button. That's not one of the features that often don't know it's available. This one just pulls up the quick information, quick average volatility over these time frames here. That's what this V button does down here. Okay, you can also click anywhere in the chart and you can see, we call this a wand, this blue line here, and you can move this anywhere you want along the chart. It's giving you right down here, it's giving you all the information for that particular day. Okay, now these numbers in the kind of parentheses here are showing you what the percentile that the volatility is at that current level. Okay, so it's showing you on this day back on July 6th that the statistical volatility was in the 6% level. Okay, so what that says is that 94% of the time that the volatility has been higher than that. Okay, and the same applies for the IV level. Okay, so you can see SV is really low right here, and IV is a little bit higher than it is on average. Okay, now you'll notice up here that these numbers are different. These represent the same type of information. Okay, and what is pretty popular these days is people like to see what percentile IV or SV, the historical or statistical volatility and the implied volatility, is at right now. Okay, and what you can do is you can actually set this up to say, I want this percentile to only cover a certain range of the chart. And a lot of people like to do that because, you know, they want to see a more current time frame. It's going to be more relevant. Okay, where, you know, environments and market environments change. So you can actually set this up by going to File and then going to Preferences, and then you can click on Volatility Chart down here at the bottom. Okay, I like to look at a 2-year time frame. So right now we can see that currently statistical volatility is in the 20 percentile and IV is in the 15 percentile. Really low IV right now, and actually pretty low SV right now as well. Okay, some people like to look at a tighter time frame. They might look at a year. Okay, so but this is where you can change that. So whenever I open up a volatility chart, I can look quickly at these numbers up here and get a really quick and concise idea of where this underlying and its options are relative to where it's been over the past 2 years. Okay. DVO here, this is a dollar volume of options traded. It's like a 5-day average is what of millions. Okay, so when you see 37,000 here, you can add a few zeros at the end of that. It's in terms of thousands. So I think that's what I said. But you can add 3 zeros onto these numbers whenever you see them at the top here. Okay, let's take a look at another one really quick. We'll pull up a Volatility chart for McDonald's here. And again, it comes in on the weekly. You can click on the daily here. Okay, and you can see we're at different levels here. Okay, and it looks like, you know, McDonald's trades about 1/3 of the volume. Okay, so with that, what I would like to do is then take you over to Survey. Okay, and what Survey is doing is it is basically taking a survey or scanning all of our volatility charts and price charts too, because you're going to have a minimum price requirement if you want to, or a maximum price or a range of what the underlying is trading at. DVO, we just talked about the dollar volume options traded on average. So this, I'm saying I want only candidates that are trading on average of $100,000 or more. Okay, these are my favorite history 2-year range to use here. Okay, and I'm going to include everything. Okay, this is what you're going to want to do if you want to look at the whole world of stocks or ETFs or all of the above. We're just going to look at stocks right now. Okay, and then you can pick them. This is your pick line here. You can pick them based on DVO if you want to. That's basically the greatest dollar volume options traded, or the highest IV right now, or lowest IV, and based on statistical volatility or statistical volatility, highest or lowest, and then you can do ratios as well. And then you can take into account the percentiles as well. Okay, and these percentiles are going to be based on what you have over here, what time frame you have over here. Okay, so if we say highest IV percentile, and I want to sort them based on the most liquid, so we'll say greatest dollar volume of options traded. Okay, we can change our minimum stock price to 40. Okay, and then we can go ahead and say go. And you can see here are the IV percentiles. Okay, so they're all going to be high, but we're sorting them by the greatest DVO, and you can see the descending DVO range right over here. Okay, so now we can go ahead and say I just want to see the highest IV percentile and sort them the same way. Okay. So here you're going to see some stocks that are at a really high level of volatility. And what's kind of nice is you can highlight this first candidate there, and you could insert the symbol into your quotes display wherever your cursor is at on the quotes display, or you can simply go to a volatility chart. Okay, and it pulls it up for you right away. Okay, and now what you could also do is you can scroll through these. So you can hit the next button, and it's just going to go through the list. Monsanto, we know about them in the news. You got Bayer looking to buy them. And you can see, of course, the price shot up because of that, and so did volatility. We can go next. And so basically what this is doing, they must have just had earnings or something. Let's do a price chart. We can verify that. Yep, or they're about to come out with earnings. That's why it's still high right now. So I can close this now. You can see how we were just going down the list here. Okay. Now, when you're doing something like this with the highest implied volatility, there's a reason there's the highest implied volatility right now. More often than not, it's going to be earnings. You'll have a lot of pharmaceuticals that will come up on here, and it'll be because there's a FDA announcement coming out or something like that, or there's talks of a company getting bought. So these are all things that would cause implied volatility to be really high like this. Okay. Another neat thing to do is you can look for the ratios here. This is one I like to look at often, is the highest IV SV ratio. This means your SV is going to be low and your IV is going to be high, and let's sort them based on greatest dollar volume of options traded. And we'll hit go on this one. And really easily you can see what it's scanning for. So Facebook's coming up here. Okay, really low percentiles there. I'm going to go ahead and go to a volatility chart on this one. Go to daily. Wow, look how low that is. Okay. And when you're finding low SV or IVSV ratios, okay, you're going to see big gaps between the implied volatility and the SV. And SV is always going to be lower down here. Okay, let's just keep going for a couple and see what the next one looks like. Okay. Really low IVs and SV. So that's what's kind of nice, is that you're able to really scan through and sort through some of these candidates. Now, if you wanted to insert a few of them and start looking at some options on them, you could highlight the first one here, and you could hold down the Shift key and click here, and it'll highlight all of them. You could insert that whole group that you created. Okay. I just inserted them over on my quotes display. Let's close this, and you can see they all populated from here to here. Okay. If we go back to survey again, you can also hold down the control key and just be selective if you want to. So I'm holding down the control key and I can select this one. And then you could hit the insert button and just insert those if you wanted to. Okay. Let's look at lowest SV percentile right now, based on greatest dollar volume options traded. Clear that and we'll go. Okay. We already saw that Facebook had a really low percentile, but this is something to consider as well. If we go back to the volatility chart on this one, and what's neat about the volatility charts is you can always go back in time here. Now, even though my chart goes back this far, my SV and IV numbers are still only looking at the 2 years. Okay. This goes back to 2012. Okay, actually I wanted to find something for you where, well, this, I'll just explain it to you. So basically what this blue line is showing you is the volatility that the options are producing. Okay, so a lot of times you'll come into a chart that has a long history, and you'll see just this red line. And then all of a sudden you'll see the blue line start. Well, that's where you can say, okay, that's where the option started trading on this underlying. Okay. I remember when Facebook came out that the options almost started trading right away on that one. Okay. I'm going to pull up the chat box really quick and see if there's any questions. Nope, not yet. If you do have questions, go ahead and type them into the chat box and I'll address them. Okay. So that's our survey feature, and it can really find some great opportunities for you. Like I said, it'll pull up earnings announcements. It'll pull up things that might have some news coming up in them or something like that. They produce some really interesting looking spreads. I do a lot of calendar spreads, and let's just find one right now and I can show you what a trade would look like using like highest implied volatility. Clear on that one, go on this one. Current highest implied volatility and dollar volume. Let's do this. Okay. Of course, it's a pharmaceutical. We'll take a look at it. I'm going to insert this into my quotes display. I'm going to close it. And here it is right here. I'm going to open up an options chain on it. Okay. It doesn't trade weeklies. I wish it did. And it looks like that there are no earnings coming out on it. So let's go back to matrix on this one, and let's just see what a horizontal. Look at that. There's got to be some news coming out on it. So I could go up here and just show you what something would look like. A horizontal spread on this. Okay. And that's because of the volatility level that it's at right now. Okay. That if this thing makes any kind of sort of up move, you're going to get some really nice returns. Okay, there's a reason it's so high. There's some information or news that's going out there that's probably likely going to make this stock move a lot. Okay. Let me just put one on down here so I can show you. So you can see how high this is. I mean, look at these IV levels right here, and look when they come back here. And what I was looking at before, when I came back to here, I was looking at going across the line here. This is where my earnings announcement date is, and I can see it's not earnings. Earnings already came out on this. Okay, so let me just do another calendar right down here. 23 days left. Okay, so these, like I said, the underlines that have really high volatilities can provide some nice opportunities for you. Okay, so whatever the announcement is or whatever news is coming out, this volatility is going to drop quickly, and the price is going to move after the announcement, of course, as well. Whatever their news they're waiting for, it's the market is basically saying that something's going to happen, and it must be an FDA announcement. I'm guessing within this 23-day time range. Okay. Okay. I also wanted to touch on some, I'm going to actually get rid of these, and I just highlight that and hit the delete key because these are the ones that all came in from my little search. I want to touch some of the modeling. I had some questions, so let's go up to view at the top here, and we'll go to default models. Okay. Now, there's some traders out there, and they'll be trying to look at the Greeks and things like that, and want to try. They'll be watching a presentation or something like that, and somebody's using OptionVue, and they might put the same trade in and everything like that, and their deltas are a little bit different. Well, what's happening is there's some people that are using this use combined call put skew. Okay, that's going to basically change how the Greeks are calculated, because it's not just looking at the calls and put separately, it's looking at them all together. Okay, and what this was originally developed by Len for is that it was really to look at like a $5 option or $5 underlying price, where there's not a lot of information, not a lot of options trading to create a good model. So what we were doing is we're using the combined call put skews in order to create a better model. Okay, so if people are using that and you don't have that on and you're watching a presentation where someone does have that checked off and you're trying to do the same positions, it's not going to match up exactly. That's going to have a big effect on it. Okay. The other thing is that if your matrix is defined with weeklies and theirs is not, your Greek's going to be a little bit different, because with weeklies defined, you're going to have more information to create the model, the skew, the horizontal skew that's happening in the options. Okay, if you have more a smaller range of out of the money strikes, or a larger range than the individual that's or the other option view you're comparing yours to, it's going to be slightly different. So all of those factors play into the modeling of that option view is creating. Okay. Also, if you're looking at a version of OptionVue from, say, 6 years ago or 5 years ago or so, we've made some advancements in the CEV modeling, which is going to, let's look at Amazon again, since we're kind of got a theme going with that one. If you click on the model button here and we click on volatility, okay, we've made some changes to the CEV modeling that OptionVue has to make it better and more accurate than a version of OptionVue, a few years ago has. So those things are going to be different if you're watching a video that someone did, or a lesson that somebody did that long ago, and you're trying to kind of mirror their actions. It's going to be a little bit different. Okay. The key is, and I've heard this from other traders as well, is to just get really comfortable and familiar with the tool you're using, and keep the settings the same as you're back testing, and you'll be able to rely on the calculations, the modeling that's happening. Okay. So while we're on the topic of volatility here, we'll click on vertical skew. This is where you can see, here's the calls, and these are the different contracts. Here are the puts. This is the basically averaging these numbers all the way out here, and you've got numbers going all the way out. Okay, and then this is using the combined together down here. Okay, you can actually see a skew graph if you wanted to. I'm going to go and click on this call, the average call volatility here, and I'm going to click on the skew graph, and you'll be able to.
Interesting in the chat, for a minute they couldn't see what you were showing. I want to go back to showing the modeling part.
Okay. Yeah, Jim just came over to me and said you guys weren't able to see something for a second, so I'm going to go back to the modeling. I'm going to pull up the chat real quick and see. I'm just reading the chats here. Okay, I see Jim's answering a lot of you guys. Can you show the modeling again? Okay. So this is I'm just going to click on this modeling button. I'm assuming that's what we're talking about here. And then we're going to click on volatility. Okay. I was talking about the CEV factors here. This is what was has been updated within, well, the last year or so.
Try to keep this minute.
Okay. And then this is the horizontal skew. This is really used, this is showing you the range, the cone here is showing you the range that Amazon is in. And it's showing you the 3-year averages, which creates this cone. So this moves up, of course, 4 times a year for earnings announcements. Okay, this increases up here, usually travels along this line, and then After the announcement, boom, it comes down to the bottom and then gradually rises up again as you get to the next earnings announcement. Okay, so this is where we are currently, just because Amazon came out with its earnings announcements already for this period. Okay. If we click on the vertical skew, so basically this is showing you the difference between, it's also showing you the horizontal skew, of course, but really it's showing you the calls, the puts, and then both combined. Okay. And then the averages, and then the averages combined. Okay. What you can do is you can highlight one of these, doing the average of the calls. So I'm going to be looking at all the calls here. And then I click on Skew Graph. Okay. And you can see all of these different, all the different call expiration dates here graphed out and where the skew levels are. Okay. So kind of, getting pretty in depth and being able to look at this kind of information. You could get a lot simpler if you wanted to, and say, you wanted to look at the weekly too, and you can say, what does that skew graph look like? Okay. So, and we're getting pretty in depth into the modeling here. There's always a lot of questions about, how this is calculated and how and what this is showing me. A nice thing to be able to do, and I'm going to out of here and show you something. If you go to Help, and then you go to, where is it at? Is this it? Yep. So you go to Help, and then again, like I said, that very first OptionVue 7. Okay, this is basically our online manual for OptionVue. And I come here a lot myself, I admit it. I come in here and I'll say skew graph, vertical skew. Okay, boom, there it is. Here's a nice write-up on everything that I was just kind of showing you quickly, and what all the information means, and all that kind of good stuff. So this is, like I said, a great resource. You could also look at the index, and kind of dive in, but I mean, I'm using this search feature all the time because it's just a quick place to come get information. I'm usually copying and pasting and sending information out from here as well. So let's see if I can get this to come up. Okay. The Volatility Chart, boom. So you can come in here and you can read up more about what we covered today, and say, because it's survey is gathering data from the Volatility Charts, you can see surveys right here, and it comes in and gives you some nice write-ups on it, details about it. Some people like to really dive in and read the manuals and things like that. Some people don't like to watch videos, they like to read. Well, that's where I recommend going. You would go to Help and then go to that first OptionVue 7 right there. Okay. So I did want to keep it short. We're getting to about 30 minutes here. I'm going to go over to the chat and see if there's any other questions or anything anybody wants me to cover. Okay. No, Jim's answering that. Yeah, the reason I did cover that, let me go back over here to View and then Default Models. I did get some questions on this today, actually, about, it wasn't necessarily about this, but it was someone saying that they were watching a video, and they said that they couldn't get their OptionVue to match up with what their Greeks or their deltas were saying. Well, it's quite difficult sometimes to get two OptionVues to be in sync exactly. Because if you've got a range of strikes or different expirations defined in your options chain, that's where OptionVue is gathering all its information to create the models. So everything's got to be in sync. I mean, everything should be close, but those things will often be off a little bit. Okay, I'm gonna wrap it up here. If anybody has any other questions, or we're always available here. You can give us a call at the office. We love talking about this stuff, and always looking at volatility and looking to take advantage of high volatility. At least I am. At least I love doing earnings plays. And if you ever want to look at some modeling of some earnings announcements, or any type of modeling in OptionVue, we're happy to help. And with that, I'm going to go ahead and stop sharing my screen here. Yep, and you can always email us here. I'm James at OptionVue.com. The number to reach us here is 847-816-6610. Thank you all so much for coming. I'm going to go ahead and stop the recording here.